Well, students, let us solve the fourth problem of cash flow statement. So 2010 question paper. The balance sheet of Ganesh Mills Limited is given. Equity share capital, we have 1 lakh increase. It will come in finance activity as issue of share. 10% redeemable preference share capital, 2 lakh last year, current year is nil, which indicates that preference shares are redeemed, means repaid. It will come in finance activity minus. CRR, we have dash and 1 lakh, so ignore this. It indicates that whenever preference shares are paid out of RF, and that amount should be transferred to CRR, which we learnt in 4th semester BCom corporate accounting, redemption of preference share. I repeat, whenever preference shares are paid out of RF, that amount you should transfer to CRR. So therefore, it's a transferred amount from CRR. Ignore. Reserve fund last year 2 lakh, current year 1,20,000. You are supposed to prepare reserve fund account in our problem. Reason, when there is CRR, it means that it is drawn, it is taken from RF. So how much amount is taken from RF to pay preference share? So much should be transferred to CRR. So therefore, there is an adjustment related to reserve fund. So you need to prepare reserve fund account. Share premium, absolutely no change, ignore. Next, PL account. So last year it's 1,20,000, current year it's 1,80,000. So net profit will be 60,000. 1,80,000 minus 1,20,000. 12% debenture, there is a increase of 1 lakh, it will come in finance activity. So it is called issue of debenture, finance activity. Creditor is a current liability, it will come in OA. There is an increase in creditor to the extent of 60,000. It will come in OA add. Building, you need to prepare an account to students because there is an adjustment. Machinery account to be prepared because there is adjustment. Furniture, you need to prepare account because there is an adjustment. Investment, you need to prepare an account because there is an adjustment. Stock is a current asset, so it will come in OA. So 50,000 decrease add. Debtor is a current asset OA. Increase 60,000 minus. Opening balance of bank 20,000. Closing balance of bank 32,000. So this will help us to find the answer in CFS. The following transactions took place during the year 2003. Preference shares were redeemed at 10% premium. So preference shares are not redeemed at par, it is repaid at premium. The preference share in the balance sheet is 2 lakh. So you are not going to repay 2 lakh. You are going to repay 2 lakh plus 10%. That is 2 lakh 20,000. Next, 20,000 was transferred to reserve fund from PL account. That means 20,000 premium you are supposed to pay. That 20,000 premium is being transferred to reserve fund from PL. Okay, students. So investment book value 40,000 was sold at 70,000, which indicates that there is a profit of rupees 30,000. So profit on sale of investment is 30,000. So as I told, all adjustment will come at two places. So 70,000 investment will come in investment account and investing activity, and there is a profit of 30,000, it will come in investment account and OA. Depreciation provided to building, machinery and furniture rupees 20,000, 30,000 and 2,000 respectively. So depreciation will come in respective accounts and OA. Dividend paid 50,000. So it will come in OA minus and FA minus. So it will come in OA add, sorry students, OA you should add and FA you should minus. Income tax paid, OA you should add, FA you should minus. Prepare cash flow statement as per accounting standard 3, that is indirect method. So working note students, see how redeemable preference share capital is paid. So redeemable preference share capital is 2 lakh. Okay. How you got this 2 lakh? From where did you get this 2 lakh? You got 2 lakh, that is 1 lakh from equity share, that is new equity share, and 1 lakh from RF. That RF 1 lakh only you are transferred to CRR. So 2 lakh you need to repay. So you got 1 lakh from new equity and you get 1 lakh from RF. So totally you are repaying 2 lakh plus 10% premium, that is 20,000. So this 20,000 you got from PL account. So you should add this 20,000 in OA. Next, students, you need to prepare the building account. To balance brought down 2,50,000 by depreciation given in adjustment 20,000. So closing balance. So students, you get 70,000 as purchase of building. You need to prepare the machinery account. It's an asset. To balance brought down 3 lakh by depreciation 30,000 given in the adjustment. Closing balance 3 lakh 20. So you get 50,000 answer. It's called purchase of machinery. Next, furniture account. To balance brought down by depreciation 2,000, closing balance 18,000. So furniture account tallies, it indicates that there is no purchase of furniture and there is no sale of furniture. Next, investment account. It's an asset. To balance brought down 1 lakh. There is a profit on sale of investment rupees 30,000, which we discussed in adjustment number 3. Then sale of investment 70,000, followed by closing balance of investment 1,50,000. So you get differencing answer 90,000 as purchase of investment. Reserve fund account. So it's a liability. So by balance brought down 2 lakh and 1 lakh is transferred to CRR. Then closing balance 1,20,000. So you get 2,20,000. So balancing figure 20,000. That is called RF transfer. So RF transferred from PL account is 20,000. So calculation of cash flow from operating activity, net profit 60,000. That is current year profit is 1,80,000 minus last year profit 1,20,000. You get 60,000. Add depreciation on building, add depreciation on machinery, add depreciation on furniture. Add RF transferred, which we got the answer in RF account. Add increase in creditor, add increase in stock, add premium on redemption. 20,000 we repay extra. So the 20,000 we are drawn from PL account. So therefore it's a non-operating expense. So therefore you should add 20,000. Dividend paid, add. Income tax paid, add. So you get a balancing figure of 3,57,000. Less profit on sale of plant, less increase in data. So you get plus 2,67,000. It's called cash flow from operating activity. Next, cash flow from investing activity. Sale you should add, purchase you should minus. So investment is sold, building, machine, and another investment is purchased. So 3 purchases and 1 sale, you get minus 1,40,000 because purchase is more than sale. Purchase is treated as expense, sale is treated as an income. So you get minus 1,40,000. It's called cash flow from investing activity. Then finance activity, receipts you should add, payments you should minus. You received 1 lakh equity share, you received 1 lakh debenture, so total receipt is 2 lakh. Then you redeemed, repaid preference share 2,20,000. You paid dividend, you paid tax, so you get minus 1,15,000. Final answer, cash flow statement. Operating activity cash flow plus 2,67,000. Cash flow from investing activity minus 1,40,000. Then cash flow from finance activity minus 1,15,000. So resulting answer you get 12,000. Add opening cash balance and bank balance. So you get 20,000. So final answer, closing cash balance we got 32,000. Okay students, thank you.